Well, good afternoon, ladies and gentlemen. This is your host, Rob. Hope you're having a phenomenal trading day today. Let's go ahead and make sure you all can hear me. If you would please type the number 1 in the questions box, let me know that you can. I would greatly appreciate it. How are we doing, Jose? Good afternoon, Ed. How are you, sir? Awesome. Afternoon, Teresa. How are you, dear? Wunderbar, wunderbar. Okay. Good day in the market, Ed. You are not kidding. It has been a good day. The YM took off like crazy right on the open today. It was a good open trade. I will say that. If we get a chance, we'll take a look at it. Sorry about the move or change in time, guys. I had an appointment today that I could not move around, and we moved it a little bit later. So we may have, I don't know if we'll get a bigger or a smaller attendance in today's class. We'll see. Didn't look at the numbers yet. But we'll see where all that winds up happening. So we do not have another trading you on the schedule yet. I'm trying to put that in there. I'll have it in a couple of days when the next one will be. But we do have on Wednesday Monster Market Movers coming up, which is second to last for the year. We may not do one in December. I'll let you guys know. But just trying to calculate all of that stuff out now as far as what days, how to make it fit, and all of that good stuff. Right? Tonight we will be going through the E-mini Think Tank. I will be introducing a brand new system into the E-mini Think Tank tonight, one that I call the triple indicator system. So we're going to go through that a little bit this evening, set it up, and we're going to go back. This is a system I used many moons ago. Worked extremely well. So we're going to go back and test it and see how the system plays out today in this market conditions. But from what I looked at over the weekend, we're getting some good results with it. So I'm excited about that. Here is the follow us page for those of you that are not. No post-turkey hangover, Judy. Nope. Good thought, though. Just an appointment could not get away from. I had a lot of stuff going on at the Roy household this last week. So, but here's the follow us page for those of you that are not following us. Please make sure you do. We're going to add LinkedIn to this very shortly. Sean just got back from his vacation down in Orlando, so he we'll get this next power hour up tomorrow for you guys onto the website. But he's working on getting the LinkedIn stuff done for us now. So I think we hit the 23,000 friends on there just the other day. So I am excited for that. All right. So let's go and take a look. Let's see. Let's go over to a template that has moving averages. I probably should do an update. Haven't done one yet on here on TradeNav today. Hope you all did have a great Thanksgiving, by the way. All right. So let's talk what's going on with S&P 500. Last time we got together was on the 19th, which was right here. This big black day, black candle day, right there, right? That was the day we got together, right? I don't remember if I dropped this in last week or if this came in after that, but this 2673.61, this light, very faint gray dot in here, that is the closing price of 2017 of the S&P. And you can see, right, if that was Monday, the 12th, that was the 16th, which was Friday, came down and we tagged it and we bounced, right? 15th. We tagged it and we bounced. We failed on the 16th. Oh, let me rephrase that. We came back down again, pushed up on the 16th then. We failed on the 19th. Right? Got the gap down. And then where was the gap? We talked about this last week. Right into this zone of confluence that we've got there, right? And that was on the 20th. So I called it on the 19th, guys. It was on the video I did on power option plays, called this zone. We nailed it. We bounced back up, and we're kind of making a bit of a recovery today. Now, when I say a bit of a recovery today, I don't necessarily find it to be very strong. There's a lot of concerning things going out there from an economy standpoint. There's a lot of concerning things going out there from a future standpoint. Let's see. Here's Bitcoin, which is now down at $3,700 and change, $3,700 and change per coin versus the near 20,000 that it was at, right? This is just falling apart. We're talking about hundreds and hundreds of millions of dollars of wealth disappearing with what people paid for these coins, and still holding on to this day, hoping and praying that it might come back at some point, which is not going to happen. In my opinion, Bitcoin is dead. There may be a recurrence of another coin may take precedence, but not a Bitcoin. Not a Bitcoin at all. So, guys, right now we've got a confluence happening of the ADMA and that 2673.61, which is the closing price of 2017, right? Very close to each other. We've got the confluence of the 2648 up to the 2654 level inside of there. And then the most important of all confluences will be still this one down here of 2569 up to 2604 inside of there, because you've got a fib line, 1, you've got the 2600 level, that's 2, you've got this ABC of the fib, that's 3, we've got the Fibonacci level of 2584, that's 4, and then this fib line is 5. You've got 5 major levels inside of there, 5 major components that fall within 40, 70, 30 points. 68, call it 69, 70, within about 30 points, 32, 33 points range, we get 5 major levels of support. So tremendous confluence in that area there. We had equal highs. Now, if this winds up being our new low, it's higher lows, which could be an ascending triangle setting up inside of there. We'll have to see what it does. It's got to make it above its moving averages, and we can't tell that until it breaks out of the 2817 level. But caution needs to be the key here, folks. Caution needs to be on everybody's mind when you're looking at what's going on here. Excuse me. You're looking at what's going on here. We break above the pink moving average, the 8, big deal. We've got the 21 and the 55 right above it, multiple levels of confluence in there as well. So I just want you to be cautious before heading out there and jumping into bullish directional trades that have any length of time to them. Now, you can nail a day trade today on a stock that's making an amazing move to the upside like an Amazon. Right? Amazon gapped up, pulled back. Right? We had some resistance right in here. Right about this 1533 level or so. We gapped up, we pulled back to it, and we took off. And you can catch an intraday trade in there, bullish, go for it. I have no problem with that whatsoever. You caught it off the moving average, go for it. I mean, I'm good. The moving average cross, I am good. I'm talking about be careful if you're trying to set something up for the next couple of weeks or months that is bullish because of the nature of where the S&P is right now. I think the here kitty kitty effect can very much come into play for those of you that don't remember that. As this, as the here kitty kitty was the market maker standing with his hand behind his back, saying here kitty 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 with a 50-pound sledgehammer in his hand, right? Just waiting to crush him, right? Be careful of directional bullish trades that are intended to be longer term, couple of weeks or so. Just be cautious to that. How you doing, Brenda? All right. Beautiful. So there's my shtick. There it is, and I'm sticking to it. So give me some companies for us to look at today, guys. Remember, it's also happy day. It's happy time. It's after a longer weekend. The market's feeling good. What are we up right now? We're up 278 on the Dow. We're up 32 on the S&P, 107 on the NASDAQ. If you see this amber trade, I left this on because of what we've done in trading you, just to use it as an example to go back and forth. But we were down $297 today. We're up 400 now, but we were up as much as 740. So we're all over the map on where we were. You're looking at a 1,000-point difference on, I think we've got 5 contracts there, but 1,000-point difference on this position. No, Brenda, she did not. So William said, Wynn has been in a beautiful channel since June 4th. Should I be trading its channel or a pop rule? The channel has been better. So let's go look at Wynn. Right, because in pop, we really haven't. So William, when you're talking trend, when you're talking channel, you're talking about bearish trend, correct? Not necessarily. Okay, good. Because I'm looking at it saying, all right, you're not going to have a conversation when we hang up here today because this is not a channel in the true respect of a horizontal pattern, right? But yes, it does have a very nice bearish pattern to it. And I am okay trading that trend in there versus trading what we do in a pop. Pop has been very unassuring of what we're doing on Wynn because of this wedge pattern that we've got set up in there, William, that it really hasn't given us a clear and concise decision while it's been stuck inside of this wedge for the last 3.5 weeks. Today, we finally got the breakout. So with all of that being said, if you wanted to lay a diagonal trend line across its tops, we kind of broke it in there today as well. So a lot of things changed on today. Now, will we stay there? Not really sure. Not a big believer in the bull market just yet. Again, I don't believe, guys, that this is the breakdown. I don't see that being the one. Doesn't mean I'm right. I don't see it happening yet. There's too many things that still need to fall apart a little bit further for that to happen. There's a lot more concerns coming up in 2019 on healthcare, the cost and some of the expectations of what the rise is supposed to be are astronomical. Not long ago, my mother-in-law had a stroke, and they threw her out of the hospital so quick it spun my head. And now we're dealing with the same thing. My father-in-law just had one. So we're dealing with the same thing with him now. It's like he can't speak. His cognitive is messed up. He can't walk. And they're trying to get rid of him already. I'm like, what are we doing here? There's a lot of concerns on various components, that being one of them, healthcare costs, and where the economy goes, what drives the economy. So William said, if you trend it with your one-to-one drawing, it's yeah. I see it. Thanks, Marcus. Yep, William. One after the other. Brenda, there's no way for us to do that. So it's the only way we can do it is that way. You got to have the card on it to do it. We would have to create an entire new product to do that, and we can't. No worries at all. Let's see. All right, so Brenda was asking for CVS. All right, let's take a look at CVS, get a little bigger picture, view in there. All right, that's an old fib. So let's back that up in there. Let's go draw a new fib in here. Make sure we have at least $1 between the 618 and the 50. So call it 70 and 72. We do. All right, we'll go back to the template with moving averages. All right, so I like where it's sitting right now, Brenda. We're in a bullish bias on our moving averages. Just keep in mind Actually, let's do it this way. Yep, that's what I want. So what I just did, Brenda, is I overlaid the SPX. You see it's in pink right here. I overlaid the SPX in there, where the SPX is just a line chart now on top of what we're looking at for the CVS chart. And it kind of shows you whether or not CVS is following along with the market or not, right? So the market had this great bullish move in here, and the S&P, and so did CVS. The market kind of fell apart, and so did CVS. Market popped, and so did CVS. So we're getting some follow through on the market from it. So it is following along with what the market is showing, or doing, I should say. All right, but now we go back to our chart over here. The market, when we compare the S&P 500, we compare the S&P 500 with with our Fibonacci's on it, but looking at the moving averages, we are well below our moving averages, where we go back to CVS, and CVS is above our moving averages today. So all of that said to say this, Brenda, if we attempt to set up a bullish trade on CVS, we could watch and see the S&P 500 move back into this zone of the recent, the 8 moving average and the close of 2017, that 2674 level, and fail off of there, which would cause a break to the downside of CVS below, and it's been down now below its moving averages for what? 4 days? 1, 2, 3, 4. 4 of the last 5 days, today being the 5th day, down below some of the moving averages. So it's definitely a concern, and not just on CVS, on any stock that's looking like this, where the stock is setting up bullish. Do you want to take the bullish scenario while we've got some bearishness happening in the marketplace? Right. So, Brenda, does that make sense? Yes. Okay. Beautiful. Beautiful. All right. You're quite welcome. Trip. Let's see which ones does Trip want. MU. All right. So Micron. So there we go. Now Micron's got earnings coming up, so be very careful about that. Trip. I'm assuming you've seen it already. I mean, you're pretty sharp when it comes to this stuff. So we did fail back in that downtrend. And William, this goes back to the same thing you said before of we've got the overall pattern to the downside. Can we trade that versus a power option plays? You can, but keep something in mind. Because it is a trend and we've got fibs set up on here, we could take the trade off the moving averages and use the fib lines as our targets, which is what power option plays is. Right? That's exactly how we do it there. That's how we roll, is by using that series of rules. So Trip, I'm looking at that 36 level. So we're pretty close to it now, to that next fib line. We've tagged it already today. From there, you're looking at 32.5 and then 28-ish or so. Just be cautious, again, because of earnings. That's all. To me, everything would be short term. We're right now looking at earnings out past December 17th. So this one still fits the criteria for me, Trip. As you know, in power option plays for us, it still fits the criteria. We can still take a directional trade on it. How far what, Marcus? Okay, so I see it. I only read the last one. I didn't see the one before it. So how far before earnings does it affect the price? So it all depends, Marcus, but somewhere between 1 and 2 weeks prior to earnings is when price is affected, where you are paying an overvaluation. If you're buying it today, more than likely it is still a fairly valued option if Micron is normally fair valued, right? But as you get closer, volatility kicks in, the Black-Scholes model with overpricing kicks in. There's a multitude of components. There's the, I just want to raise the price because I can component, as the market maker will do around earnings time, because they are very uncertain of to where the position is going to go with earnings. So they're trying to hedge their risk, and they offset the risk by charging more for the options themselves. So there's Micron, Trip. NVIDIA. I was looking at this one today from Monster Market Movers. I just drew a new fib on it today. Pure bear is an understatement. Obviously, their earnings just smacked the daylights out of it, right? And those came on the 15th, right? So we saw them last week, just crushed them to the downside. And the funny thing is they've already come down and just about tagged that negative 618. So the fibs are almost no good already at this point. I would love to see, Trip, a day or two more of meandering here, up a little bit, down a little bit type thing. Make it up to that 156 level, which will be just enough time for the 8 to kind of give me a confluence there and start rolling over and see what it does. So Trip said still in wait after the earnings, right? Yeah, it's too soon after earnings, Trip. You know that from what we do in power options plays. We usually give it a little bit of time to make sure that we're not getting caught in the whipsaw of it. So, but give me a couple more days and a good confluence of the 8 and the negative 272, and I would be all over it like white on rice, especially if I see the market start to roll over. I would be very excited to take a bearish trade on it if we can see that happen. So big fan of the pattern as long as we can get a couple of things to happen in the next few days. And I don't want it to happen today. I don't want the close near the 8 today. I want it to be 2 or 3 more days of meandering. I want the market to settle out, the market in NVIDIA to settle out over the next couple of days before we get that move up. And then, of course, we've got itty bitty machine. All right, so IBM earnings long gone back here with the earnings. Good strong move down. Guys, you can see exactly what the question Trip asked about the weight. Look what they did. They just kept dropping. Now, I'm not saying there are not ways to trade that. I don't do well in that scenario of the trade. Personally, I like better the pullbacks and the failures. And what's happening right here, Trip, we're getting a confluence of the fib line, which is the 118.80, the 0.118, and the ADMA, which is 119.27. And we're only 20 cents away between the pink line and the black line there. That's just 20 cents. That's all it is. Excuse me. So if we're looking at 20-cent difference, as far as I'm concerned, we're there. We are there, baby. So if we can get that rollover, Trip, and again, I'd want to time it with the market because you've got a bearish connotation going on here. You've got a bearish connotation on the S&P. And that's one thing you've got to keep in mind, folks. Yes, we got a bounce today. A bounce for a day, excuse me, a bounce for a day doesn't make it a good trade. It just means it bounced today. That's all. I need to see major changes for me to take a directional position on a company like an IBM or anybody else that looks like them. It's not IBM. I don't have something against them. So Lisa is asking, is that an H pattern? Lisa, it is the setup or the look of an H, but not actually the H pattern. So if we highlight what's there, right? And if you're looking at that, yes, that is an H. Absolutely, unequivocally, you are 150% right. But the actual H pattern requires the retracement at least up to the 50 or the 618 before rolling over. Okay, so it's a mini H or what I will call a false H. And actually, I don't even know how to identify this one. I call the moves up to the 382 a false H pattern. So this one only made it up to the 236, which was nothing more than a hesitation point, meaning we really weren't done going down to start with, right, with what it looks like there. So, but you are right, Lisa. It has the visualization of what an H looks like. I would just want to take this candle and raise it up 1, 2 more lines. And then we've got a good H in there. You're welcome, Lisa. All right, Brenda's asking for W Day. All right, earnings is the biggest thing I'll say about that one. All right, they're coming up on the 29th. Wait. Wait. Be very careful, right? And what's going on here. You cannot even rely, number one, on accuracy of movements of stock price because the earnings could be driving it, right? News around the earnings coming out. There could be one trader stepped out there or, a group of traders stepped out there and bought, 4,000 contracts of an option. There could be a rumor out there that drives it one way or another. So be careful with earnings set up in there. It almost looks like it's an ugly one, but let's do it this way. What I was trying to see is how parity it looked in a line chart, but you've got a shoulder, a head. I came all the way back down to that same neckline and what might be another shoulder in there. Well, actually, let's do it this way. I think maybe that's too thick. So here we have a shoulder. You have the head. This could be another shoulder right in there, right? For who, Brenda? Earnings for W Day? Yeah, so Brenda's saying hers is shown the 27th. Yeah, and again, this is only a guide. You definitely need to rely on an external source because if the company that Genesis is buying the data from doesn't get an update from WDay or whoever it is, it may not show as an update. It's not like they go out and they check each one of these themselves, right? That would be insane. But there are companies that do that, the earnings whispers of the world. Oh, okay. Brenda said, I'm wrong. I was on CRM. Okay. Note to self, get a second confirmation before you say it. When I teach my live events and I ask for a number, someone to do math, I make it very clear. I'm not writing it down until two people give me the same answer. That just prevents me from writing stuff down that is incorrect. So we've already violated this Fibonacci. I mean, completely violated it. So we've got this fib right in here, which we violated that one now, right? So we're back up above the 882. So that one goes away. Then we need a new fib from this move now. So when we look at this now on W day, we're back up near the 764. Right, let's go and put some moving averages on it. So we're back up at the 764. Moving averages are not done much for us, and that's although it's this was a great move down, right? Good bearish trend down, good strong bullish trend up. It's actually caused now from, and I'll delete this back off, but from right about here over, it's caused a rectangle, right? And it hasn't been a pretty one, but we've gotten more of this sideways type move, right, in here than anything else, which is causing the moving averages to not move. Not yet, Pete. We can do that in a minute. Let's see. So, Brenda, I'm looking at a Fibonacci 4-step trade, which we go over these in Monster Market Movers, which is this Wednesday night, by the way, guys. We're going to add in here an 882. I'm going to add a green one because it is a Fibit. It is a Fibonacci 4-step. So we are closed right now above the 764. Assume that this is the closing price of the day right here. Okay. I don't care if it goes up higher as long as it doesn't close higher than 143.44. That's the key. That's the first step. Once it does, I wait for it to get back below 140. I could take the breakout. I could take the retrace, whatever type of trader you are, and you target the purple line, which is the 135.74 level. Okay. That is our 618, our primary fib number that's out there, right? Guys, I got to tell you, I sit on Sunday nights and watch this God Friended Me show. Whether you're a believer or not, I really don't care. But they talk, it's all, they're after a guy right now that they calling him Fibonacci. He's 0.618, right? Is one guy that they're chasing after, trying to find. And all of these Fibonacci type things pull into some of it in some of the shows they've done. But I love it. You know, anything about this, anything about fibs just floats my boat. I get very excited about where else we see it in nature, because it just confirms everything else that I see, just confirms everything that I teach in the market, how accurate it is based on what we do with fibs. So if we can get the rollover from here, Brenda, I'm looking at that 136 level. If you get the push up, I'm looking at 143.5. Let's see. So Jose's asking about support on the S&P 500. So let's go see. Is there support at 2364? 2364. Oh boy. No, my bad. I just read it wrong. 2634. Okay. So I've got 2623. I have a support level. And I've got 2648. I don't have anything at that 34. Now, you might find a horizontal line back there if we look further back in time. My chart's just going to get very busy because of all the old fibs that are on there. So I don't have, there's not a fib line in there, just out of curiosity. 36. 34. So it becomes the fibit. That is the actual fibit, Jose, between these two lines, between the negative 272 and the negative 382. Now, we don't normally split something that small, but every fib line has a 50 percentile to it. Well, guys, when I teach the golden ratio retreat, which is the H pattern, and sorry, I forgot who asked it before. Lisa, maybe it was you about the H, right? This is a much better H here. When I say better, it's really not. Well, you get the view of it came up near the 50 and failed, right? So it is a better one. It didn't quite make it, but it got closer, right? Well, then I talk about most fib moves are two lines, and it's a 2 standard deviation move, because about 96% of all data points fall within a 2 standard deviation move, and between each fib line is 1 standard deviation. So from this blue line to this red line, 2940 down to 2886, that's a standard deviation. Down to 2852, another standard deviation. Well, that accounts for 96% of all data points. And what happens is, in most cases, you see it stretch out a little bit below and fail midpoint. So if we got up to the 50, right, and we failed, you look for 1, 2.5 lines, which puts us at a fibit level here. So it's not that it is not an important level. It's not one that the fib chart shows, but the center of any two Fibonacci levels as a fibit is extremely important. All right, so now I read the number there. There are some points there in April and May. If positive, would there be a chance of the potential double bottom being formed? Very much so. I see the double bottom happening back down here about that 2631 level, 2603 level. Sorry, I'm just inverting numbers like crazy today. 2603 level, right? I see it happening more in there. This is a tough call for a double bottom, because when we talk double bottom pattern, let's do this. Come on. Ooh, that was weird. We talk about a double bottom pattern, right? That's a good double bottom. if you have this type of move happening, you know, and we're at that same bottom 1, 2, 3 times, that's a congestion setup. That's just a compression type pattern there, a pressure building up, where we're all within the same move. Unlike here that we had multiple moves that brought it from to the bottoms each. So that one line that, well, actually, if we just go back to the chart itself, and you see this, you know, this candle came and stretched down. Then 2 days later, we're back here again. That's tough to call it a double bottom in there. It is in the purest of words, but not in what the technical pattern actually represents. There needs to be some time span between the first bottom and the second bottom. So, Jose, does that make sense? All right, and I think I said Jose. Jose, did that make sense? Just making sure I didn't call the wrong name out, because I'm trying to do two things at once. Okay, beautiful. I'm reading the next question as I'm asking you, is it okay? So, Facebook. Pete's asking on Facebook, would a bullish option position be worthy going in this morning? So here's the thing, Pete. At some point, Facebook's going to bounce. And you know what? At some point, I'll be wrong by saying it's in a bearish bias and we need to trade it bearish. But for right now, it's in a bearish bias. It's a tough call on today as a one singular day when the S&P is still in bearish territory, bearish bias. At Facebook, bearish bias. I don't have any clear signals to take a bullish trade. Now, I just want to make sure I'm clear on that, Pete. I'm talking about holding something overnight. If you're talking about a day trade, if you want to consider a day trade, the rules are clear and concise entry. Is there a concise entry at a key level, a Fibonacci level, a moving average, a Bollinger Band, whatever it is that you're using? Is there a concise entry? Is the rule there? That's the first question. The second question is, do you have a clear target? So if we were using the moving average as an example as our entry at 137, I've got support at 134. Now, I'm not saying it's not enough, but we've got to keep in mind that Facebook has a decent move to it. Facebook moves about $5 every 2 days. Right, but as a position to jump on, Pete, for today only or for overnight? Getting into it today, but holding it overnight. A huge question. Guys, when we go through the mastermind group that I'm doing, and I'll be doing some one-on-ones with each of the students that are in there, you know, and then some of the trainings that we'll be touching on in there, things like just like that. Of, is this the right place, the right time that I should be taking these types of trades? You can fight the system or fight the man, whatever way you want to call it, right? Which is a bearish pattern. And sooner or later, you'll be right. But how many times can you get this pop up here and you take the bullish trade and it fails. You get a pop up here and it fails. You get it up here, it fails. It fails. How many times do you do that before you go broke? Right, so if you're looking to get into the trade today, Pete, then you're going to want to be looking more at what's happening on the intraday or the short-term charts, right? You want to be looking here. So you can see Facebook daily chart is still bearish, right? The bottom center one, right? The 5-minute chart has been bullish all day, right? It definitely has some resistance there. I would be stepping back then, Pete, into my intraday trading techniques of what am I looking at? What am I looking for? So as an example, look at the double top pattern we had in here, which became a triple top, which is where we're at right now. So if we could get, as an example, Pete, a little bit of an increase, a close, come back and retest and a bounce, awesome. Then I love it. Then I absolutely love it. Well, 10-point move what? Left, Pete? You think there's 10 points more to go to the upside? And right now I see a stop no matter what. There's resistance at 140. And you're not taking the trade down here. You've got to be careful with moving averages. You could easily fail on that the next day. So there's a lot of things setting up that are kind of like, yeah, maybe, but not 100% sure. Oh, from the open today. Yeah, okay. So the open today, oh, yeah, but look what happened from the open today, Pete. The open today was a gap up. All right, so we closed approximately 131 and we opened up at 133. So we had a $2 gap to the upside. And then we ran up to 136, caught 137. So we've had about 8-point move in the position so far on the day. So it's been a decent move so far on the chart. Nothing to shake a stick at. Nothing that says, oh my goodness, this is a horrible trade. But it is definitely something that the bigger part of it happened right out of the box in the morning. Does that make sense, Pete? Yes? Okay, beautiful. Let me back up a couple of questions there. See what I missed. Hey, Rich, how you doing? All right. So did you take the trade, Rich, on booking? What do we say? There should the pull back to the 8. Okay. So Rich, remember the rules. Okay. Bearish with the pullback to the 8. Are you looking at a day trade, Rich, or are you looking at something to hold overnight? Well, in power option plays, in pop, right? In pop, we're talking about an overnight trade, right? Which means bearish with the pullback to the 8 means close near the 8. That means the day is over. Because Rich, you personally have traded for a lot. You've done a lot of trades in your life, okay? Certainly in the last year, some of the conversations you and I have had, all right? Well, if you're getting into a bullish trade here or a bearish trade here, looking like it may fail, it may push, from where it is intraday, you know what the whipsaws can look like on an intraday basis. So if we go to booking, right? We had the climb up, we went sideways, the fail, and the move up, small fail back to the moving average, right? And we're back again. If you're using the intraday, if someone is using the intraday to take a bullish trade based on what it's doing right now, I'm good with that. If we're trying to take the bearish or the bearish trade from power option plays, I would want to see the close near the 8, which I was hoping for a confluence to take 2 or 3 days to get there. Give me a confluence of the 8 and the 1800 level, and then look for the move to the downside. Rich, I know, power option play is a little bit newer for you, but is that making sense the way that I'm saying it? Yes? Okay. So I'm really looking for the close. Cool. Let's see. Brendan, I'm not really sure what you're referencing there when you said I saw that. I thought it was the first person. Was you? Not really. So, all right, I think I know what you're talking about. Give me a second. I'll come back to that. All right. So Rich said, I was setting up alerts on the ADMAs for the pop trades, thinking I should take them midday. So the alerts would be set up on yesterday's closing moving average, Rich. So at 18, well, I can't say what it was yesterday, right? Let's see. I got to back it up. Well, too many days. So at the 1811 level, Rich, is where we would have it set for the alarm, right? That's where we would set it off of for today, looking to take the overnight trade. Yeah, okay, good. You got that. There you go. God friended me. Yeah, it was awesome. Exactly. Okay, good. So you said at 1811. We still want to see it close near it. Now, obviously, that's changing now, right? We're down at 1807. Even though the stock's moving up substantially, right? $30 today. Even though it's up $30, the moving average is still coming down because of some of the massive moves we had in there. It's going to take a little time to catch up. We'll still see a little bit of drop as the market moves up. Get me down near the 1800 with a moving average, close near that and roll over. Boy, Rich, I'm all over that like white on rice. It went through 1810. Okay. Yeah. So recently, I haven't updated. But I should have had some of this. Right. We still want that close near it. Yep. Exactly. You shouldn't is exactly right, Rich. I got it, Brendan. I got it. All right. So Bill's saying this is a random question. I got the trade now, but haven't started using it. Can you tell me the relationship? Is there one between it and trade? There's no relationship between Trade Navigator and Trade Station. I use both programs. I do all my analysis, charting. All of that is done on my end of day stuff is all done on Genesis, is all done on Trade Navigator. I trade off of platforms like TradeStation, or you could use Thinkorswim or something like that. So there's really not a relationship between the two, but I always have both. What are the things that I look for in a broker? Wow. I'm a big fan of single source. So in eSignal, as an example, where you have software, but they work with outside brokers, a little bit more concerning in there, because if there is a problem, and I've seen it happen with an eSignal before, because we had it with a previous company I was with, eSignal said it was the broker's fault. The broker said it was eSignal's fault. And the customer said, I don't care whose fault it is. I lost money. Who's giving it back to me? And everybody said, well, him, and pointed the other direction. It wound up being the broker's fault, not eSignal's fault. But that still meant the broker would have to give the money back. So I'm a big fan of having that relationship in there where they're both the same. I like functionality, Bill, of what I can and cannot do inside of the platform. I think there are a lot of great features inside of Thinkorswim, but I'm finding more and more some of the advanced things I can do, as complicated as they may be in TradeStation. Some of the more advanced things are harder to do on Thinkorswim. And Rich will attest to it by setting up some of the advanced orders and things like that, right? Are some sketchy things that are, I could screw it up really easily by hitting the wrong key. So just some of those types of things. I like the creature comforts, and I think there's value in having more than one platform, right? Robert, who I don't think is in here today. Normally I would have heard from him by now. Nope, he's not here today. Robert uses multiple platforms, right? And some of them he uses the same platform, like Thinkorswim. He opens multiple instances of the same platform to do different things with. He'll open a paper trading, he'll open a funded one. So he's got multiple things happening in there. So does TradeStation allow better order options? Yes, they do have some better order options in there. And again, Bill, I guess it really comes down to what level are you trying to achieve with it. You go to a company like Interactive Brokers, where if you're trading with a very large sum of money, they've got portfolio margining available, which you need even less in some of your trades. They trade about 20% of the world's equity options trade through Interactive Brokers. Their customer service to me has always been horrible. You're a number, you're not a person. Someone told me they've lowered their minimum, which was 10 grand, and they were hard fast to it, wouldn't budge. I understand they have now. So, it's really about creature comforts. Go online, guys. Interactive Brokers, Brenda. Go online and search for Barron's Magazine Broker Comparison 2018. So Barron's Magazine Broker Comparison 2018. And you'll see IB, Interactive Brokers, comes up on the top for almost every category now. TradeStation, Thinkorswim are still up there, but they're not the number ones this year. IB is. Okay, Judy. Appreciate that. I recommend you look at IB, Marcus. How about that? The advantage of Trade Navigator, Bill, is besides the fact of it has the best charting engine of any charting program on the market that I have seen, period. It works offline, meaning you don't need to be plugged into the internet to see a chart. You could have no internet, driving in a car, in a passenger seat, hopefully, and no internet, and you can still be looking at your charts. Of course, they're delayed. It's whatever your last update was. But I can set my filters and scans up and build them a lot easier to me than I can in TradeStation, because I took TradeStation's course. It was called Easy Language. It's their programming course. Here's the number one thing about Easy Language. They lied. It isn't. It's far from easy. It's the hardest freaking thing I've ever done in my life. I'd rather sit down and let someone pull my fingernails out than learn how to program in that thing. TradeStation's up there, Jose. They're going to be somewhere in the top 3, as is Thinkorswim. And it's always been, Thinkorswim last year was number 1 for, I think, just about everything. They were like number 3 for international trading. Who cares? We're not international, right? Most people here are in the U.S. Not all, but that's the only one thing that was bad about Thinkorswim. Okay, so be it. All right. I just can't keep up with the questions. It's going by too fast. All right, Trip, no worries. I'm not a fan, Marcus, of the Robinhood platform. I think by the time they buy your stock, you're paying too much for it. So, Brenda, we've not finished the scans on Trade Navigator. Guys, here, let me just give you a quick synopsis, okay? I personally am sick as a dog right now. That's number 1. Number 2, my father-in-law had a stroke on Wednesday. And if any of you saw the accident, Rich, you may have heard of it, the guy that died on the LIE, the 31-year-old man, Eric Prado, very close personal friend of our family. So we're dealing with a ton of stuff here. So scans have not gotten to yet, which is the reason for it. Yeah, it was tragic. His wife just announced that she was pregnant 2 days prior for their second child. They would come back from a family wedding. Just brutal. But anyway, thank you, Brenda. I appreciate it. Yeah, Rich, appreciate it very much. Anyway, with that being said, guys, here I wanted to show you this one thing because I thought I put the slide up earlier, and I guess I did not. So let me close this thing down. Let me get here. Okay. So guys, you've seen this come out in a bunch of emails this week. It's called TradeWatch Alerts. All right. Guys, it is a text message service that we are putting out right now. It's going to start on December 1st. Right. The text messages are going to be, a series of potential trading candidates sent out to you via text message. Right. And it's a proprietary process that we're going through to scan the entire market for the top setups. It's something that has taken a while for us to build. I'm very excited about. Okay, all the signals are delivered immediately to you, right to your phone, right to your text message. There's a 2-week trial with it, and that trial starts December 1st. So we're working on it now. We're getting all the last minute bugs out of it. We're going to try to get some announcements or some messages out this week as well. The ones that come out this week, guys, make sure you're checking charts. Don't just ever jump into a trade because you saw this. Make sure you're reading it, looking at the chart first, right? Pull them up on your phone on Thinkorswim or TradeStation, whoever. We're just getting all the kinks out, all the bugs out. And there's only 1 or 2 more things we've got left to test, and then we're ready to rock and roll. But the rest of this week, we're going to try to get a couple of candidates out on there as well. And the whole idea, guys, is this. While you're learning the fish, we're going to give you some fish along the way, right? While you're learning how to do it. Yeah, Rich said, I'm already in an amazing deal at $79. Exactly, right? I mean, guys, it will be a $149 product. I made a decision. That's where it's going to is $149. $79 is where it'll start. You're locked in at $79. Now, you're not charging anything when you start, guys. You get 2 weeks free. There's no charge for it. Right, up front. So your decision isn't anything other than, and we've had a massive response to this. I'm very impressed with where we're at. Your decision isn't today. Your decision today is, yes, I want to test it out for the next 2 weeks and see how it works. Right? Then, if you like it, do nothing. If you don't, send us an email. We'll take you off. And you guys know if it was a mistake, we fix everything. We never, ever, ever don't fix something that was wrong. Right? Trial December 3rd, Amelia said. Thank you. December 3rd is the date that it starts, right? So, guys, I don't even know if I'm on. Oh, yeah, I am. So let me do it this way. I wasn't even sure if I had the page up. So I just dropped in the chat box there the link to this. And again, I know many of you are already enrolled in it, right? Well worth it for $79. Monster Market Movers, Lisa, is what we're teaching tomorrow night. Judy, I appreciate that. Prayers are definitely appreciated. My father-in-law is not doing as well as we would like him to be at this point. So we're real thankful for all of that. Okay. And remember, guys, the trial is free for 2 weeks. So there's no cost to it. It's a free trial. And guys, listen, if you're, I know someone had said in here, and it really doesn't matter who it is, but someone had said concerns of going online and putting a credit card in. I get it. You could always get with Amelia, send an email to support@wealthbuildershq.com. She can do it over the phone for you, which puts it right in our system, which basically, guys, puts it right into our processor, which is Stripe. That's who we use. It puts them right inside of that. It's a piece of cake, extremely secure, the highest encryption that you could possibly have. And you're not doing anything online if you have a concern with that, right? So not a problem whatsoever. Awesome. So, guys, looks like we have another successful workshop under our belt, another successful power hour. No. Eric Prieto, P with a P, not F. No. They live on Long Island. These are friends of ours. Here, William. I get you. You're welcome, Lisa, and thank you at the same time. So, guys, I'm gonna end the event here. If you have some questions on this, send an email in. Now, keep in mind, guys, this is going to $99 very shortly. This was our Black Friday, Cyber Monday special that we offered. That's where we're rolling this out this weekend, right here, right now. If you have an interest in this, take advantage of it. And yes, it will go to $99. And I'm sorry, no, we will not go back and fix it if you chose to not take advantage of it. So you're here. If you have an interest, great. If you need help from Amelia, great. Send her an email. She'll work with you on whatever it is that you need to get accomplished. She'll try to figure it out, and we'll get it done. Jose, you're quite welcome. You're quite welcome. All right, guys, I'm going to just hit mute. I'm going to leave the room open for another minute or two just because of that link. Go ahead, click the link, download the link, get started with this, guys. And Hey, I'll see many of you tonight in E-mini Think Tank. We'll go over our new trading system. And guys, if you want to be part of this triple indicator system tonight, there's a 2-week trial if you take the quarterly subscription on E-mini Think Tank. There's a 2-week trial that's included with it. As long as you haven't taken it before, you're eligible for it. Come on in, check it out. If you like it, great. If you don't, great. All right, folks, I will catch up with some of you later. And the rest of you, do not miss Monster Market Movers on Wednesday. All right, take care. See you soon.